I'm Alan Kenny, Editorial Director with REIT.com, and I'm in Chicago for REITWeek 2013, NAREIT's Investor Forum. Joining me is Tony Paolone, REIT Analyst with JP Morgan. Tony, last time we talked, you told me that you were interested in regional malls and office. How have those two sectors performed up to your expectations?
Well, from a fundamental point of view, both property types have generally performed as we've expected. The office business has been a more challenging one, as you've seen the recovery take place in a very slow fashion, and the stocks have been largely in line, if you will, with the overall REIT space. So that's kind of what we thought would play out. What we hope for and what we're looking at going forward, though, is if you have an instance where the job growth starts to pick up in the country, we'd look to get a bit more bullish on the office sector, as hopefully you start to see some of the absorption of space turn into some pricing power for landlords. On the mall side, it's really continued to be a pretty strong sector, and most of the major mall REITs have double-digit rent spreads, so they're still raising rents on tenants, and that looks like something we think is going to continue for a little while here.
And a lot of the metrics coming out lately say that property valuations have hit where they were around the 2007 market peak. Does that have any impact on your outlook for the REIT sector going forward?
Well, in some property types and in some markets, you have had property values move back up to peak levels. Well, what I think we're most focused on right now is just watching the cash flows at the property level and seeing what kind of growth those are likely to deliver over the next 2 or 3 years in a continually improving economic backdrop. And as long as we continue to see that growth transpire, I think property values can go higher. And in fact, even despite the recent swoon in interest rates, you still have yields and returns on commercial real estate that are generally attractive to investors. And if you have the cash flow growth to go along with that, we don't see much of a reason why you can't continue to see property values going higher.
Okay, and lastly, do you think that shares of REIT stocks right now are fairly valued?
Well, over the last few weeks, you've seen the stocks pull back pretty dramatically. So when we look at valuations relative to, say, the private market, relative to the stock market, relative to perhaps bonds, this pullback has created an opportunity that we think makes the group look a bit on the cheap side in our mind. So we'll see what the rest of the bond market will hold for us over the coming quarters, but just given the pullback that the group's experienced in the last couple of weeks, it makes the stocks look fairly interesting.
All right, well, Tony, thanks a lot for your time.
Thank you.
And for more on this and other REIT news and analysis from REITweek 2013, be sure to check out REIT.com.